Hey traders, welcome to my recap here for my trading on Wednesday, June the 15th, trading ES futures here. And some people have actually asked me recently what type of chart I'm using, if it's a 5-minute chart, if it's 15 minutes, what it might be. I actually am using tick charts here, 555 tick. And what that means is that each tick is a trade that's completed. So each bar prints when 555 trades have been completed. And so that kind of removes the time element a little bit, and I really like that on a day trading level. I think time-based charts are really useful for swing traders, long-term analysis, or position traders. When you start getting into a day trading level, it becomes quite useful to be able to break down action a little bit more, because a lot of times, if you're a day trader, if you're watching, say, 15-minute charts, you might get one big 15-minute bar, but you're having to wait that 15 minutes for that bar to close and not really able to do anything within that bar itself. Whereas having something like tick charts, range bars, volume-based charts can break that sort of thing down and allow you to see what's going on within that bar, sometimes trade within that bar, and get a much clearer look at the momentum of the market, the short-term momentum, and also the market structure that's developing, because sometimes a little bit of that structure can be lost within some of those bigger bars. So that's what I'm using here, 555 tick. As far as the day itself goes, this was the FOMC day, so it's a pretty big one for interest rate announcements. There's also the press conference, all of that. So there's some not quite as important FOMC days as this one. But because of that, had a little bit of an expectation that things might be a bit more limited, as we kind of waited on that release, which comes in the afternoon. So things might be more limited in the morning. We often see on those FOMC days that the day before is actually kind of slower, and then things pick up a little bit on the morning of the FOMC announcement. But yesterday was actually a pretty good day with some pretty good swings in the market, as you saw in my other recap there. So I did think that things had a pretty good chance of kind of balancing out a little bit, maybe being a bit more limited on this morning. So I was being a bit more cautious in my approach. Not many trades in here, only trading for just an hour and a half. So not really pushing things too hard here. But taking a look at the trades, we actually had a fairly good push up in the pre-market in here. We kind of covered a decent little range and settling above this clear level in here at this 2068. And so once we had a push off that, I tried a long here. Probably could have managed this one a little bit better in terms of just taking a very small loss or around break even, rather than losing 3 ticks or 3/4 of a point. But really to have that expectation that price was fairly likely to reach for this next level here, which was the yesterday's high, and also a touch in the pre-market. So had a pretty good chance, I thought, of reaching into that 2073 there. And then if we could get there, fairly likely to try and reach for a more major level that I have on my charts. You can go back, that 2075, a very clear flip zone acting as both support and resistance, and a lot of supply coming in, a lot of selling coming in the last time we were there. So had that in mind as a potential target that I thought we might be able to break through, but definitely wanted to be cautious with this one first. So essentially took this trade, and when it didn't fall through on a couple of attempts, I left things a little bit more wide open, trying to give it a chance to make that push, because that was my expectation that the market was likely to do that. So it didn't happen here. I wasn't able to kind of latch on a little bit later, but no real worries about that. Eventually did push up. Because we had some pretty good momentum there, I was willing to look for that secondary test, taking a smaller profit off the table than I usually would, but that's just because I had that clear level in place, which is something that I can do. It's part of my plan that I can bring in those targets when I've got those clear levels, because a lot of times these aren't going to break right away, even if they do break after multiple tests like we saw in here. This was an interesting one that I actually considered, but you're just getting a little bit too tight to the level there. Notice this one I had a fair bit more room to operate, to kind of manage my trade. Once we start getting really tight in here, I usually will be more cautious, but a pretty clear trend line that established here that had a fairly good chance of pushing. And then what would have been a good trade here, and just missed out on this one, had it touched the area that I was looking to get filled, but I wasn't able to get a fill on my limit order, which does sometimes happen. But not a big deal. That if I had had that trade, yeah, it would have been a fairly good day. Would have probably banked another 1.5 here, and would have been able to turn it into just an okay one, more than a couple points. But it's not something that I worry too much if I can't get that one fill, because that is one of the potential downsides for limit orders, but being able to know your price, being able to define your price, know your entry, know your targets is very, very, very valuable. So I'm willing to pay that price occasionally in order to have that sort of concrete plan in place. And then from there, we came down a little bit, but we had the oil inventories here, so wasn't going to step in front of that until we saw how it resolved. And then we just kind of started to trade in a little bit of a range here. And we can trade in ranges with our trading approach. You've seen that in prior days, prior videos. But when things get really tight like this, I'm not really willing to trade within from the middle into the edge. I'm willing to trade from one edge to the other if I have a decent trend in place, but I really need some limited momentum, and we're getting some pretty quick reactions off of here. Not that well defined as well, as you can see. So they're different levels throughout, so not the sort of thing that I usually like to trade. And I'm happy just to kind of sit on my hands a little bit and wait for something that is more clear and fits my trading plan. So not a lot going on the day, but that's all right. Now that the FOMC is out of the way, things can definitely open up a little bit. And that's something that does kind of happen as you have big announcements, FOMC, non-farm, things tighten up a little bit, and then they start opening up a bit more from there and lead to some more opportunity. So that's, again, part of the reason why I don't try to set an exact target for myself every day, because each day is different. Some days offer more opportunity than others. Some days call for more caution than others. So it's important to just adapt to what the market has on offer, how the market's moving, what the structure is like each day, and trade accordingly rather than try to force anything. So that's it for now, guys, and looking forward to hopefully a really good Thursday and Friday for a solid week overall, and I'll see you in those recaps.